Exactly what has happened to cause a drop of over 10% or perhaps 13% from yesterday's high, close around $40. We haven't seen a decline this large in quite some time. Tesla's results were better than expected. The stock price seems low. Why is that? Let's look into some of the reasons why maybe isn't the case. First of all, we all saw this coming. I predicted the stock price would rise before earnings, but then fall thereafter, as is customary. In most cases, the quality of the report does not important. This is simply the pattern that occurs most frequently. Invest on the gossip, cash off when the news breaks. Furthermore, the stock price has been on a wild ride recently. Bearish investors have been anticipating a market decline for some time. The clock, however, kept ticking to within a hair of 300. Yes, I did just say 300 was a very real possibility. Fine, no problem. At just more than $299, it was close enough. However, Wall Street wasn't encouraged by the earnings call because the company's short-term outlook was bleak. The message that was sent to Wall Street was that Q3 would not be a good quarter. Why? Given the impending scale of the disruptions, this is so. Elon didn't provide a lot of detail. He mentioned that it would involve factories from around the world, but he didn't specify which ones. Battery enhancements, he added, were to blame. Anyone here is free to make up their own interpretation, as Elon did make reference to batteries. Believe there is a possibility that Tesla is switching to Cal's new batteries. This would necessitate a global blackout in order to replace the current batteries, which would affect Shanghai, Fremont, and possibly Berlin. It's not entirely obvious if this also means the car will shut down, but that's what most people assume. Is this an improvement only for the Highland Model 3 lines, though? The Tesla community is apparently divided over whether the Highland is real or not, despite all the photographs that have been leaked. However, it appears that roughly 75% of the locals are enthusiastically on Team Highland's side. It's going to be popular. I think we can all agree that the downtime is the best time for Tesla to perform line upgrades if there is a Highland update. As the new battery is structural, it is possible that the update will extend to other areas as well, such as the front and back castings. Yes, the downtime is thrilling, and the Highland potential is much more so. There should be no Osborne effect because Tesla will likely sell out of all Model 3s before the launch date. This is ingenious. Instance, if they have balanced their stock levels that skillfully, it stands to reason. And it's hard to see why they wouldn't. It's a stretch to think that we'll actually see the Model I Juniper update, when the factories are all shut down for upgrades to the machinery and batteries, but it's possible. With a potential 80 GWh of capacity, this new Cal facility may produce more than enough cells for both the Model I and the Model 3. But wait, Wall Street expected terrible news, and this is exactly what they got. However, improvements at the manufacturing are seen as positive by Tesla bulls. And if it's not a major overhaul, it should at least streamline operations and cut costs. But I'm keeping my digits crossed for Highland. It's possible that the lines will be down for up to a month, and that might cost us a lot of money in lost productivity. Since we can't be sure, we'll have to use an approximate estimate. 100,000 fewer vehicles produced. If I had to make an estimate, I'd say that Q3's total may be around 350,000. Since production has consistently outpaced deliveries for the past 4 quarters, Tesla now has a 90,000 vehicle surplus. Not all of them are currently in transit, though. However, there's just enough vehicles to last for a few weeks, so it is hardly a substantial safety net. As a result, it may be challenging for Tesla to achieve quarterly deliveries of over 400,000. It is hoped that the upgraded lines would be faster and more efficient, and the resulting order backlog will be manageable. And since a Model 3 facelift and maybe even a few Cybertrucks will be released in the 4th quarter, demand for automobiles is expected to increase dramatically. It looks like Q4 will set new records. I venture a prediction as high as 500,000, which would get us very close to our 1.8 million goal. Nonetheless, due to this downtime, the 2 million goal was officially off the table, even though I have been stating it was highly unlikely all along. Further price decreases are a source of additional concern. According to Elon, it's all about interest rates. Vehicle prices increase as interest rates rise because of the greater supply, payment of interest. As a result, a rise in pricing leads to a decrease in demand. This is rudimentary economic theory. There is still a risk that rates would rise by another quarter of a percentage point, which would lead to a further decline in Tesla's prices. Of course, only in the United States does each market have its own rates, but that might mean the dollar gets stronger, and we already know that Tesla's profits have taken a hit from currency fluctuations. Keep in mind that if we continue to experience positive results with disinflation, these rates will decrease over time. Cars are more accessible financially, and demand rises as a result of decreasing rates. Eventually, Tesla will restore its margins and earnings by increasing pricing. Whether or not this occurs is a matter of chance, black swans, etc. As a result of the economy's instability, people are putting off major expenditures. Even though the Model I is more expensive than a Toyota Corolla, Elon said it was the best-selling automobile in the world in the second quarter. However, the market reacts negatively if there is a possibility of price decreases. Some analysts predict the stock price could fall to $220 or below, which would present an excellent purchasing opportunity. That seems like it could be pushing it a little bit. I anticipate a gradual increase over the coming week or two as we prepare for the Cybertruck launch and hear more encouraging news from Tesla. These banks are currently being forced to sell safe securities at a loss due to deposit outflows. Wood added that bank startups are using deposits to finance their operations as a result of a lack of venture capital funding, just like in Silicon Valley. Wood concurs that the economy is contracting severely as a result of inflation. There has been a minor shift in market sentiment, but keep in mind how unpredictable it may be. To my mind, this is just a passing hiccup. Soon, Tesla will make an announcement that will serve as a timely reminder of just how rapidly this startup has grown. Possible groundbreaking in Mexico. Till the present stock of Model 3s is depleted, I don't think there will be any news regarding a Highland, as that would cause customers to wait till the next version before buying. Seeing this updated Model 3 with its new batteries would be great for gauging the state of the art in electric vehicle, EV cell, battery, and drivetrain efficiency. It is said to have a larger battery than the existing model, 60 kilowatt hours versus 66 kilowatt hours. Range for the rear-wheel drive variant may approach 300 miles if the structural pack includes front and rear castings. This would be fantastic to witness and prove to the public that the EV industry, and Tesla in particular, is still making strides to increased efficiency and range. The market frequently gets FOMO back into Tesla and get trillion amended of the company's huge potential with relatively little effort. Even Elon Musk believes that SSD will be less risky than a person in 2018, and he does sound persuasive once more, but it is difficult to believe him in this day and age. It continues to strive to soon raise its benchmark interest rate to about 4.5%. According to its officials, it would take a lot to sway them off this course, and the Fed is poised to raise interest rates if the excessive inflation rates continue to persist after this. According to a tweet from Cathie Wood, many banks didn't anticipate the Fed fund rates to increase by a record-breaking 19 times to 4.75% in less than a year. However, if significant progress is made, perhaps this mystery OEM will come forward and announce that they are adopting Tesla FSD soon, which would likely cause the stock to jump by 10% given how positively it has reacted to the opening of the charging network alone. OEMs can make a lot more money off of selling Tesla FSD than they do from charging on the network. In addition, it reaffirms the market's belief that Tesla is indeed years ahead of the competition in FSD. In any case, the recent dip in the stock price wasn't anything to be overly concerned about, at least not in the long run. There are many upcoming catalysts that might bring it tumbling back down. They tried 300 and failed, but they are probably still experimenting. Personally, I will be away for 2 weeks, so I may not be able to record as much during that time. Nonetheless, I will do my best to report any noteworthy developments that occur during that period. You're welcome for listening. You should subscribe and give it a thumbs up. You may find me on Patreon and Twitter.